Hello, everybody. This is Ellman, the Blue Collar Investor, welcoming you to this BCI podcast number 56, titled Selling Deep in the Money Calls to Exit Stock Positions. We're going to use a real-life example with iShares MSCI Brazil capped ETF. This trades on the NASDAQ exchange under the ticker symbol EWZ. Now, this podcast was motivated by an email I received from Ashvin, a BCI member, regarding a series of trades he executed with EWZ. Let me give you a history of these trades. On January 17th, 2019, EWZ was purchased at 43.09. Now, over the course of the next 3 months through April 22nd, out-of-the-money calls were written to generate cash flow, and successfully, I might add. Now, on May 16th, 2019, EWZ became an underperformer and had gone down from 43.09 down to 38.24. Now, the 5/17/2019 short call that was in place was deep out of the money and could be closed for pennies. At that point in time, the share loss was $4.85 per share compared to the original purchase price of 43.09. So the difference between 43.09 and 38.24 is that $4.85 per share loss. So we were looking for a plan to exit this underperforming ETF, EWZ, and see if we can also mitigate some of that share loss. So here was the proposed plan that I received in Ashvin's email. Selling the June 21st, 2019, deep in the money 22.50 strike, much lower than current market value. And that would generate a bid price of $19.60. Now, assuming for a moment that the option is exercised, in other words, share price remains above the 22.50 deep in the money strike, the loss per share, as you'll see in a moment, will decrease to 99 cents per share. And that's because this deep in the money 22.50 strike has a very high time value component to it, which we're going to discuss now. Now, keep in mind, this 99 cents per share loss does not include all the premium that was generated over the past 3 months. So overall, if the particular option is exercised at 22.50, there will be a significant gain over the 4-month period. Here's the math. 43.09 was the original purchase price. 19.60 is the call premium for the final deep in the money call. Shares were sold at 22.50. That means if the option is exercised at this new strike price, the loss would be 99 cents per share. Let's break down the math with the Ellman calculator. For those of you who don't have a copy of it, you can get a free copy of the basic Ellman calculator at our website, www.thebluecollarinvestor.com. Just click on the free resources link on the top black bar of our web pages. Now, we feed the information into the blue cells on the left side of the spreadsheet. 38.24 current market value. 19.60 is the bid premium on the 22.50 deep in the money strike. Option expires June 21st. Now, the calculator will tell us that the time value return, or ROE, on this particular option is 17.2%. Huge. Of course, there's no upside potential because we're agreeing to sell our shares at a lower price than current market value. Now, the downside protection of that 17.2% initial time value profit is 41.2%. So what that means is we're guaranteed a 17.2% time value profit as long as share price does not decline by more than 41.2% by contract expiration or in about a month. So the time value return is huge. The downside protection is huge. And that tells us that the implied volatility of EWZ is also huge. Let's do a deeper analysis of the calculations. Option premium for in-the-money strikes consists of time value plus intrinsic value. Because it's so high in both of these categories, that tells us that the market is anticipating substantial volatility, and it doesn't define in which direction. Now, all the benefit and good news about selling this specific deep-in-the-money call must be tempered with the understanding that this high implied volatility comes with some downside risk. So if we did decide to execute this trade, we must be prepared with our exit strategy executions if it becomes necessary, if share price should start declining substantially. In other words, we have to have our 20%, 10% guidelines in place in case share price begins to decline. May not, but at least we will be prepared for it. Let's review. Selling deep in the money strikes is a viable way to close a long stock position and mitigate losses in situations like EWZ, where share price did decline almost $5 a share from its original purchase price. And this will help us if there is a time value component to the premium, as there was in this case. Now, it doesn't always have to be a losing trade. If you decide you want to sell a stock and you definitely want it removed from your portfolio, you could do this with even a winning stock or a stock that's had no gain, as long as the in-the-money strike has a time value component to it. Now, keep in mind that options that offer significant time value returns with substantial downside protection do have that high implied volatility, so we must be careful and be prepared with our exit strategy arsenal. May not be needed, but if it is, we are prepared. That's what blue-collar investors do. Now, I want to remind you that you can get a free copy of the Ellman calculator, the basic edition, on our website. Just look for that free resources link on the top black bar. And feel free to go through the blog articles I've written over the last decade. We also have other free resources at that link that I described before. On our blog page, you could sign up for our free newsletter that's published weekly. I put hours into writing these articles. They all have an educational component, and they will be delivered to your email box 10 a.m. Eastern Time every Sunday morning. Also, in our store, we have multiple versions of all of my books, ebook fashion, hard and soft covers. We also have various calculators, spreadsheets, online video programs, trading planners, and as well as online mentoring programs. All that at www.thebluecollarinvestor.com/store. Folks, I want to thank you so much for taking the time to listen to and or view this podcast, Selling Deep in the Money Calls to Exit Stock Positions, and we use a real-life example with EWZ. Thank you, Ashvin, for sharing your trades with us. So I hope you enjoyed and benefit from this podcast. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.